everyone. Thanks for joining us here in the charts. Tune into the market-based edition. Fellow Commodity speaking. We're doing a really quick request on this stock. I'm going to give you the longevity line, the critical level that it needs to stay above before we get started. All stocks can go to zero. I'm not sure if this is a scam. So I'm going to get those disclaimers out of the way. So we're going to go over the practical levels on this and go over a very important question at the end. So welcome back, loyal family. If you're new here, we only go over price action. Let's not waste time and dive right into the charts here, shall we? All right, so today is June the 19th, 2021, and the previous close of ITRM is the instrument. It's going to be $2.03, slightly positive, approximately 1% for the close for the day, okay? All right, welcome back, everyone. ASMR Interesting Analysis. Here are our infamous lines, weekly candles. All right, perfect. So it looks like the market is broken beyond that nuisance line, right? The yellow breakthrough line. That looks really good. Of course, the longevity line is going to be at $4. Hang on, let's change the color of that. All right, perfect. So we're going to pay attention to the previous level of major resistance from the weekly candles is actually going to be $1.09. Again, the longevity line is going to be at $4.92. The thumbnail probably brought you in. It's going to be 140% potential to the upside. It's just a measured move from the current level or the close up to $4.92. This stock may have a lot more, that's redundant, a lot more potential to the upside, but that's kind of the practical level where it found resistance naturally, and how you play the markets is you kind of buy into the previous level of major resistance, and then of course you at least scale out of some into the previous level of major of resistance after the market moved down. Well, that sounded confusing. So if we back out here, actually, let me just pull up the lines. I think some people they don't truly understand what I say. I'm not saying all of you, but just for some who are just they don't understand what I mean when I say the previous level of resistance. So as I just pulled up the lines there, I never pull up the lines. That's pretty cool, right? You see how the weekly candles, see how it comes up to that green line, right? It gets rejected from that green line at about $1.09, gets rejected. Boom, it breaks above it, comes back down, finds support. That's all we go over, guys. Support, resistance, and patterns. If you pull up the lines, you can actually see it a lot better. I just like the candlesticks, right? So if it breaks above, let's just say hypothetically it goes up to like $3.69, comes back down, finds support at $2.22. It's just walking up the stairs. That's it. It's so simple, guys. You just got to pull up your charts. I'm not doing anything special. All right, so how to approach this market here. I'm not really sure how to approach it. If you got in at the previous level of resistance that the market moved down $1.09, then naturally what I would do is just pull out my Fibonacci retracement tool, and I would actually measure it from, pull out my fib. So what I do is I actually measure from the previous high. I take the wicks. I'll measure the wick on the weekly here, and then I'll draw it down to the previous low that's measurable. Can it go lower? Yeah, sure. You have to be open to that, right? And again, I pull out my fib and measure, as I mentioned, the highest level or the most recent high all the way down to the lows of the wick, and then at the 1.27, the yellow line here, that's how you find your potential target. It's not guaranteed to make it that high, and it could obliterate that level, but the yellow line is at about $3.56 on the 1.27. So that's basically how I always I pull up my charts that way. Okay, so that is the Fibonacci retreat, the fib measurement, the extension as a potential target. Okay, guys, $3.56. Please take note of that. And of course, again, if a rejection happens, the only thing that you do is revert back to the previous level of resistance. Let's pull up that line again so you can see it. Again, this is under the assumption that the market actually breaks above this level, which is currently at about $2.25. Really, really simple, guys. If you pull up those charts, okay, if it breaks through that level, boom, you can expect it to go up to that target. Could it go higher? Sure, but I always play it, in a practical sense, and of course, assuming that the market is healthy and it's just kind of walking up the stairs. All right, let's pull up my beautiful candles. I love my candles. All right, so let's go over the technicals are done, by the way. Thanks for stopping out. Thank you for the request. We're going to answer a question from Matt Brill. Hopefully I said the name properly. So he's just simply asking how to determine a good entry when we come out with the levels on the chart. We typically color code them the same, right? The green line, the red line, you have the yellow, breakthrough line. They're all the same, right? So when we come up with the videos, if you're like really anxious to get in, I can't give you financial advice, right? But if you're just like, you know what, I just want to get in something, right? Yeah, $1,000 is a good, measurement tool, right? Because everyone knows 1,000, or even like $100. But let's just say 1,000. If you just want to get in 10%, I always start with like a 5 to 10% position. You can even go with like 5%, okay, of your total position, not your portfolio. You figure how much you're gonna install, 5%. We come out with the videos. You're just anxious. You're like, the market is going up. I don't want to miss out. Don't erase that mindset, okay? There's no such thing as miss out. You participate or you don't participate. You find another opportunity. There's millions, okay? But again, if you are anxious to enter, like at whatever you're comfortable, just throw something at it, right? 5% of $1,000. It's not a lot, but just an example, right? So you're in the market, boom, the market goes against you. As soon as you hit the buy button, that typically always happens, right? You hit the buy button, the market goes against you. Boom, it goes down. The next thing that I would do is wait for the $1.09 to have a revisit as a potential double bottoming situation. But see, here's where it comes, the importance of understanding candlesticks and reversals, right? That's where your knowledge must come into play, and understand whether or not you want to add more if the market goes down to 109. Because if the market goes down and it breaks down below 109, then essentially you've taken that risk. I typically don't have a stop loss when I've entered the market at like a 5% position. Right? I just kind of let it ride, like whatever it's going to do, because I've already calculated I'm going to lose that money anyway. I'm always participating with an amount I'm comfortable with losing. So 109 would be the other area where I would, again, see if there's a reversal happening and just install a 20% position in addition to what you've already put in the market. So for example, if you already put 5% in the market, then you would install another 20% at this level and don't do anything else. Okay? You wait until the market behaves, or obviously I would have already identified a reversal candle if I'm installing more at this level, right? So I'm installed 25% total, invested, and then I wait. Okay, if the market breaks down, okay, I'm comfortable with losing that because I've already determined I'm comfortable with losing it. Okay, I'm comfortable with losing that because I'm already determined if the market goes lower, it's okay. I still have another 75% to inject in this market if needed, to, of course, participate more or increase or, make my position a lot more handsome, assuming that the market is going to eventually move up. Okay, so essentially, I would not install more than 25% of my position from the initial video, and if the market continues lower from when we posted the video, if that makes sense. Okay, so I would never have a total of more than 25% of my total position. Now, and I think you also asked about what about the breakout? Okay, see, I don't feel comfortable entering on breakouts. That's why I never really play it depends. Breakout plays I play on the higher time frames, but within a range bound, when we go over the ranges, I would never enter here, never, because the objective is to enter closer to the level where the previous level of the previous level of resistance, if you're pulling up your weekly candles, okay? To enter as close or as much as you possibly, not as much as you possibly can. Enter at a practical level closest to the previous level of resistance that you can identify, if that makes sense. Okay, so position yourself from a position of strength, enter the market from a position of strength. Okay, and then of course, when the market moves higher, when the market moves up to or even close to it, right, you don't have to try to ride it all the way up to that level. You just simply take profits when you have profits and leave runners in the market. So when it does, if it eventually meets that longevity line that we go over, you can make that decision at that moment whether or not you want to keep your entire position because you're in profits, right? Or just let it ride. I never add as the market's going. I never do that. You destroy your average. I've got to make a video about that. All right, so hopefully this answers your question. I don't really understand breakouts. I pay attention to the range, okay, and then maximize on the range as I enter closer to the critical level. Hopefully that makes sense. All right. So leave an appropriate thumb this below the video if you enjoyed the content. Thanks for sticking around to the end, guys, for listening on that brief explanation in terms of how I would approach the market if I were listening to myself. All right. And that's pretty much it. Thanks for dealing with any noise in the background in the hotel lobby here. Also, if you're new, before you go, we covered the alternative markets, Bitcoin, altcoins. Kind of subscribe, hit the bell, and we'll send you that information when it is available. Once again, thanks for stopping and listening to the end. Take care of yourselves, protect your portfolios, execute your strategies. We'll talk soon, and bye for now.